What up, HyperChange? Welcome to another episode. Today we've got a legendary guest joining the show. I've been wanting to do this for a while, so I'm glad we got him. Welcome Amit, who is a legendary streamer. You've probably seen him talking stocks on X or YouTube. Welcome to HyperChange.
Gally, thanks for having me. Been watching you since 2018. Happy to be here.
Dude, well, honored to schemin collab. I gotta say, shout out for bringing just like the fun and energy to the stock market, because I watched your like market opens, and as someone who got up at 6:30 a.m. Pacific in high school to like trade stocks, I wish I could have watched your show back then. So I love like the energy and the movement that you've been bringing to the stock market. For those who don't know, the reason why you caught my attention is because of what you're doing with Robinhood and Palantir. You've engaged with management, you're interviewing the CEOs, you're sort of leading the retail investor movement. It really feels like the Tesla movement, but like in 2018 is kind of happening for Robinhood and Palantir now. And I just love seeing this retail investor push. And I think it's, and you've been crushing it with, I mean, Robinhood and Palantir are booming. The CEOs are engaging with you. Both companies are on fire. I'm not investor in either. Maybe I will be by the end of the podcast. You don't know. But so before we get too much into either of those stocks, there's so much I want to cover. Can you fill us in on like, what's your background? How did you get into investing? What's your philosophy?
Yeah. So again, thanks for having me on the show today. I got into the stock market around 2019, and then 2020 happened, COVID, stock market went to the moon. I actually didn't make money in 2020. That's how bad I was at like understanding what's going on in the markets. And so it was a tough time just to like learn the lessons of what it takes to actually figure out how to invest in a company, how to analyze a stock. And then I end up investing a decent chunk into Palantir in 2021, and then 2022 happened. So from 2019 to 2022, it was just this era of learning what it means to actually invest and dealing with the punches of the market. But all of that, I think, turned me into a better investor. So now I'm here, and now I stream every day. In terms of my actual background, I went to Rutgers Business School. So got a degree in business management. Started a ton of little businesses in colleges. Some worked, some didn't. And so, it was a learning experience as well in entrepreneurship. One business that I did start was a public speaking consulting firm. So my actual background is in debate. I was one of the top 3 debaters in the United States of America, and I was one of the top 9 debaters in the world. I was on the USA debate team. So I kind of traveled across the world my junior and senior year, publicly speaking in all these different competitions, gained a lot of skill sets when it comes to winning debate tournaments and championships. And I turned that into a business. So I started consulting with other people that wanted to increase their speaking skills. And that communication background has been really good on YouTube, because YouTube is all about communication and getting people's attention. So that consulting firm I started during college. After I graduated college, I just kind of kept doing that consulting firm on the side, and that was kind of my income. And then I started YouTube 2 years ago, and now we're here.
And let's dive into Palantir then. What specifically about Palantir? I see you got the hat on. It seems like that is like your baby. That's kind of like for me, Tesla is your Palantir. So yeah. What hooked you on Palantir?
So I did debate in high school, and when you do debate, you have to study a lot of philosophy. There's no way you can actually like succeed in competitive debate if you don't study just a tons of different schools of thought. And so I've always been a philosophy geek, always been a philosophy nerd. And when I discovered Palantir around March of 2021, but really started diving in around November 2021, if you went on their website, they described their operating system for companies' data as an ontology. And the ontology is a philosophical word that goes back hundreds of years, and it's about the state of being. So if I say the ontology of this chair is for me to sit on it, it means that the state of being of the chair is to have a purpose that allows me to sit. The ontology of your existence is a very deep existential philosophical question. And so I see them describing data as an ontology, and my philosophical head starts going, why is a tech company talking about a very unique philosophical term? Then I get into the CEO, who has a PhD in philosophy, neo-social classical philosophy, and he's over here on CNBC saying, if you don't like our stock, I don't give a fuck. You don't have to buy our stock. And that energy was just so exciting, very Elon-esque. And I started doing more research, and then I fell in love with the actual mission of what the company is and how big they could become, and now we're here.
So I'm kind of playing dumb here, but I'm also curious. Palantir started as like a government contract kind of company. They were funded by Founders Fund, or that was a big part of it. Peter Thiel Founders Fund, PayPal Mafia, which I want to get into. I have a conspiracy theory about why the stock's running. Everyone's saying it's price sales, but I think it's pricing in a Trump victory, which has JD Vance on the ticket, who was part of the Founders Fund Mafia, which is involved in Palantir. So now this cements Palantir's position within the U.S. government's new status quo. moving forward, and it's about that. It's not about the near-term financials, and it's about what the next decade, 8 years look like for, or 10 years look like for Palantir if JD is a powerhouse in US. I don't want to get too sidetracked on that, but that's like a big.
I think you're onto something really big there. No, you're
Yeah,
100%
well,
on.
let's dive into that then. What's your theory of Palantir here? Because I guess let's get to the juicy part of it, which is people are like, Palantir's a hot company, but they're overvalued. I personally think if you look at Palantir the way it's recurring revenue, how much of their revenue goes to cash flow, you need to adjust the price sales multiple for that. Everyone who's comping it to price sales is missing it. It's like comp it to cash flow, how sticky that cash flow is, and the trajectory of that cash flow, and the valuation, like, to me, is a lot more rational. I'm like, it's stretched, but it's not as stretched as people are saying. And then I layer in this JD thing, and I'm like, it makes perfect sense. Palantir's almost fairly valued at 45 based on all the factors I consider, kind of. But I'll let you chime in.
No, it's a really good discussion. A lot of people right now, especially on Twitter, it's so funny because when Palantir was $6, $7, $8, and you're talking about it every single day, and like people aren't giving, people just don't care. Then it goes to 45. Now people are like, no, it's too high, right? And so the swings of deeply undervalued versus deeply overvalued are really interesting to see. I think it's a fair discussion because I 1000% will say Palantir is an expensive stock, trading at 40 times price to sales, $100 billion market cap with about 2.7 billion in revenue. Yes, that is expensive. But I saw the stat this morning, and I think it kind of frames the discussion. Nvidia was $15 in 2021. Its PE was 64. Nvidia at $142 in 2024. Its PE is 64. So the stock is 10x. At the time, Nvidia at $15 with a PE of 64, you could say that's incredibly overvalued, but it wasn't. It was expensive. It wasn't overvalued. And I think the broader qualitative story on Palantir, whether it's the AI thematic, whether it's the political aspect of JD Vance and then being able to get more government deals, whether it's the fact that defense spending across the world is ramping up at a level we haven't seen before because the kumbaya of globalization is starting to be like, no, China actually hates us. We can't just be friends with them. That's starting to become more mainstream consciousness, or it's getting into people's mainstream consciousness. And so as a result of that, I think the market's trying to figure out, how do we play that? And the only way to play that is to look at the software derivative of what is this AI thematic. So here's the biggest point. Everyone loves NVIDIA, and I love NVIDIA, and the GPUs are scaling like crazy. These GPUs mean absolutely nothing if there is not a use case for them. And you know this, given you're big into Tesla, FSD and robotics seems to be the best real-world application of these GPUs. So will NVIDIA make a ton of money if Tesla succeeds with autonomy? Yes, but Tesla needs to succeed with autonomy for these GPUs to be meaningful. ChatGPT needs to get 1 billion users for these GPUs to be meaningful. Every single CEO and venture capitalist that I hear talk about AI and transformational AI is talking about three things: autonomy, robotics, and then enterprise AI, workplace AI transformation, agentic workflows. How do we make a business more powerful and increase productivity and operating margins using AI? That to me is screaming Palantir. Every one of these AI startups that are building some type of AI moat on top of GPT and wrapping it up to say, hey, we're going to sell this to legal firms or finance firms, etc. I think that's what Palantir does in an encompassing platform called Foundry, and now layered with AIP. So to answer your question, is it overvalued? No. Is it expensive? Yes. But is there a sum of the parts story that's coming together to justify the current valuation? I think so. Could we see pullback? Sure. But I don't think that necessarily means it has to go back to $15.
And what you just said is such an interesting part of their business model, is like they're locked in and they're really starting to get the data, and they're almost already getting paid for that. And then now it's like, what happens next? We haven't even seen that phase. But like what you're saying, it seems like the uniqueness of the data is such a key part of the value of where the AI is going. And Palantir has positioned itself to have all of the data with all of the right companies so that they're going to be the AI play in the enterprise, like you say. I don't know. I'm like, I guess that's the bull case, but then I'm thinking of like one of my friends who had like some app called like Glean for his startup.
Yes.
And so it's like, does some startup come in? That's kind of where I get with Palantir, is like, I'm just not the customer. Like, it breaks my rule of be the customer. And that's why I've stayed away from it, despite like seeing this like such a juicy business model of like their moat with the data and the AI like tsunami that's about to hit. But part of me is just like, I'm just not the customer. Like, so I guess I'm kind of curious, like, what's your personal scheme with Palantir here? Like, you're an investor. Are you owning a bunch of stock? Are you holding it? Like, do you love being a liaison for retail and management? Is that something you want to continue? Do you like being independent? Do you want to work with Palantir? Like, what's Amit scheming, personally, kind of with how to play this?
You know, it's interesting because I'm also not I can't use the product on it, even though now there is a way to use the product as a consumer. But originally, when I invested, you don't have access to the product, right? It's only for big enterprises. Now they release something called AIP Dev Tier, which anyone can download or sign up for an account, and you get free
Okay,
credits, and you can
that's
just
cool.
start building on top of. Yeah, so like if you actually wanted to use Palantir's Foundry and AIP platform and build an app on top of it, they're having a DevCon conference in November, and a bunch of people are submitting applications that you can actually build stuff on top of it. In terms of my relationship, I started off as an investor. I'm still an investor. I believe I'll be holding this company for at least the next 10 years. And personally, this whole liaison between the company and myself, this kind of just happened. I mean, I was making a lot of content about them because it was really exciting for me to cover the company, just like you were in 2017, just trying to figure out on these Reddit forums, will Tesla actually become profitable, all this stuff. It became sort of like a puzzle, a journey, an exciting maze. And then this community develops because a lot of people at $7, $8 are like, huh, maybe this is going to be much bigger than what we think it is. And then as the stock goes up, the community just gets bigger and bigger and bigger. And then the community relies on someone to actually help them understand what's happening. And I don't have a career on YouTube unless Palantir executes at the level they've executed at over the past couple of years. And even when the stock was in the gutter, the press releases were like every other day. Palantir's working in Ukraine. Palantir's working with Tampa General Bay Hospital. Palantir's operating 16% of hospital beds in the United States. Like deal after deal after deal, stock is stuck. And what that told me is I should be the guy trying to communicate and analyze these deals to the marketplace because retail investors see the value of this. The market's being stupid. They don't see the value. That's the asymmetry that's necessary for a retail investor to actually have alpha against the market, which is how the Tesla story played out. So now I've just developed a really good relationship with the company. They've actually engaged retail investors just like Elon did in 2017 because he realized that you were a lot smarter than a bunch of the analysts. And I think they're realizing, hey, there's people like Amit and Arnie, another good friend of mine, that actually understand Palantir. Let's talk to them versus always having to talk to JP Morgan. And that's kind of how the story is playing out. In terms of like the consumer product, I know every single $1 trillion company is a company that has a consumer product, all of them. Palantir, I feel like might be the one company that has a B2B product that can reach $1 trillion just because of how big a moat they have in the data space and how important the thematic is becoming. Like JP Morgan says enterprise AI is going to be a $5 trillion market by 2045. Okay, so if Palantir gets a small portion of that market, you put a 40 multiple on them, they get to $1 trillion, right? So it's just a question of how fast they can grow and if they can live up to that growth.
Last thing on Palantir, any comments on Alex Karp? Because that's one of my big philosophies is like the leader is everything. So what's your take on, spending time with him, analyzing him and Palantir?
I think Karp is a visionary. I think he's a genius. He had a segment on CNBC a couple of days ago where he talked about the quote unquote overvaluation of the company. And it's one of those things where this is a guy who studied philosophy and has a law degree. So the level of intellect that he's coming from when he's thinking about problems in society is massive. On top of that, he is more towards the progressive left, which is very interesting for someone of his stature. These people tend to be more right wing. They tend to be more libertarian, as his co-founder Peter Thiel is, but that's not the case. And I think that creates a really unique duality between Karp and Thiel as the sort of management leadership structure of the company in the early years, where they had a lot of internal paradoxes and contradictions that ended up making sense in terms of how you resolve them. So one of the biggest things with Palantir is they wanted to not allow civil liberties to be violated, even if they were providing software that was defending the government. So 9/11 happened. That's what kind of inspired Palantir to become a thing. Peter Thiel was like, hey, all these fraud detection algorithms we have in PayPal, after they sold PayPal for $1 billion, they're like, what if we could bring that to the government? That's when the CIA's venture arm, In-Q-Tel, started funding Palantir. And I think you needed a guy like Karp who could understand the deep bifurcation of philosophy, civil liberties, and providing technology that works, because the entire thesis was, hey, if we give something to the government that allows them to not have to invade people's civil liberties, why? Because we're preventing more 9/11s, then that's a good thing. If you have more 9/11s, the government has more of an excuse to invade your civil liberties. If you have less 9/11s, because you have software that defends against that, the government can't easily invade your civil liberties, and that takes a lot of technology. So I think Karp was just a genius revolutionary who came up with these ideas in conjunction with Peter Thiel 20 years ago, and now he's seeing the fruits of his labor as the company is a $100 billion company.
And what's your take with that of like funding like military adjacent companies? Like when you say it's born out of like 9/11, it's like, it's on one hand, it's like inspiring for the safety of the West, which I think is awesome. But then it's also kind of like, just like, do I want to be involved with that? I could be investing in any business. Like that's something I've struggled with Palantir. Like, So what's your take on that and just kind of the philosophical level of like working with the government, working in defense? Because it's not just Palantir. This is a theme that comes up as an investor.
Yeah, I think the military industrial complex is a really tricky thing to navigate in terms of being an investor. My philosophy on this is as the more older I get, the more I come to this conclusion, which is that the only way to prevent a war is to actually be so strong that no one fucks with you. And I think the philosophy around Palantir is like, we're not going to make, guns and missiles and weapons. Lockheed Martin can do that stuff, but we're going to make the software so that a country that doesn't have nuclear weapons, like Ukraine, can have something like a tactical nuclear weapon via Palantir software, which can hopefully mitigate against future wars. And if the United States has the best software that can deploy all the military equipment, one day you might not have to deploy that equipment because there's just no need to do it if you don't get into a war. So look, at the end of the day, I think that we're investing in a business that has a big commercial aspect to it, a big government aspect to it. But the government aspect, if you believe in stopping war through strength, that's the way you justify it.
Cool. And yeah, it's like there's always going to be hard questions in investing. So I appreciate you thinking it through. But honestly, I'm personally very bullish on Palantir, and I do think it's going to hit a trill, even though I'm not a shareholder. But I think you're like on the money with it, and it's one of those few hidden gems in the market where I see like owner, operator, founder, this huge mission. You can see that they're thinking in decades. Like those are very, very rare. Like I'd say there's like a dozen companies in the entire public markets that I like really feel confident fit that. Maybe more that are smaller, but I don't know them. But, and I guess that kind of brings me to my next one I want to cover, which is Airbnb. Because we're talking about this retail. I kind of want to pitch you on it. So maybe before I get into it, what's your take on Airbnb stock?
I like the company. My friend Arnie, he's a big guy on this, and he's been talking about Airbnb for the past couple of months as well with me. I don't know if the stock is going to be the multi-bagger that people think it can become, for a variety of reasons. But the biggest thing is just like, do they have a moat that is sustainable enough to overtake the Hiltons and, the Marriotts and all that stuff? Because if they do, I think it gets really big. If they don't, which I've been seeing some pushback over the past couple months in terms of the user experience of Airbnb, maybe they're not able to do that. Brian Chesky is the smartest guy in Silicon Valley. He understands what the hell they're doing. I think the one thing about Airbnb is the VCs made a lot of money off of it, right? When they went public, shareholders necessarily haven't. And I think that's just, the more they execute, the more it'll happen. But I'm kind of torn right now on if it is the big tech of real estate.
Yes. Okay. So many ideas there. And I heard Brian Chesky on a recent podcast talk about how they price the IPO. And I think that's a big misconception. Like Airbnb, if you look at the stock, it's kind of kind of like this, but really it had like this big like boom in the private markets that got there, and then had an absurd demand. They had to like triple the price of the company. It was 30 billion, then it ends up like listing at 100 billion. But if it really listed at 30 where they originally priced it, it would have been like a great. So I think there's been a ton of learning lessons along the road, but I feel like it's kind of a Palantir at 7 moment is where I've been having like staying up till 5 a.m. reading the SEC filings. Like you said, Chesky's the GOAT. We know it. Everyone's like real estate, cleaning fees. I'm looking at this. I'm like, this isn't real estate. They don't own any assets. They have 12 billion in cash, no debt, 5 billion in cash flow from software. They don't do real estate. They do software. And their software is like some of the most profitable software we're seeing in the entire world, but everyone's just like thinking about the company totally wrong. And I think we're at the rubber meets the road moment where the market's thinking growth is going to go like this. And I think it's just going to go like this. And Chesky's going to show us accelerating growth rates. Everyone's going to have to re-rate the company. Like if you look historically at their trailing 12-month cash flow, it's just like this, like 3 billion in the past year, 3.5 billion. And now it's up to 4.5 billion in profits. They're buying back $1 billion in stock a quarter, which is 8 million worth of shares per day to decrease the supply and demand. But I see your point of like, it's not sexy. It's a blue chip. That's kind of one of my things. It's like, I'm like, this is a great business that I think should be worth double what it's worth fair value, like immediately, and then compound it like 25% as Chesky like builds this $1 trillion behemoth over the next 7 years. So, but the longer it sits here at 75 billion, the more stock he buys back, the more of a IRR we're going to get on our shares to $1 trillion. So I think it's a long, slow, and steady 10 bagger, but it could be an immediate like pop once the market like kind of ups it to fair value. So it's not as exciting as these other things, but also to me, I think it is. It's just we're looking at it boringly. Like just the way that Palantir has all these data silos around the world, which are the advantage with AI. I think Airbnb is the AI for travel concierge. They have all the data. They already have all the supply of homes.
Let's get deeper into that. Let me ask you a couple questions, and you can. Yeah. So what is the here's the question. What do you think the market doesn't understand about Airbnb that you understand, which is when the market wakes up, they're going to be like, holy fuck, why didn't we get this?
That Airbnb in 25 years will be way bigger than it is now, and the cash flow will explode and continue to grow. Like, they only have to make 4.5 billion for 15 more years in a row, flat earnings to pay back their entire market cap. That's a metric I look back. Like, years to pay back. How many years will it take you to generate enough cash flow of your market cap? Airbnb has
Right.
15 years to pay back if they don't grow. I think their real years to pay back is 10. That's like the lowest you can possibly see in the market. Like is Nvidia going to make $4 trillion of profit in 10 years? Probably not. Airbnb might make $80 trillion of profit in the next, 15 years or whatever, or 12 years if they grow. So I don't know. There's like different ways to look at it, but I feel like they have so much cash, and the competition thing of like, do they have a moat? I think if they didn't have a moat, they wouldn't be making money. The fact that they have
Correct.
41% free cash flow margin and it grows every year, it's like, this is the strongest moat I've seen. They survived the COVID pandemic, which was the biggest change in real estate that we've ever seen. They have as many employees as heading into COVID, but more than double the revenue. And it G-checked them, so they got lean and are now one of the most efficient organizations in the world. So I'm seeing this like crazy turn of events where just as everyone's shit on Airbnb and lost hope, they're actually firing more than ever. And you see Chesky's like, guess what? We figured out short-term rentals is way smaller than long-term rentals. What's the biggest problem with Airbnb? Cleaning fees. If you can amortize the cleaning fees over 10 days instead of 2-day stay, then you all of a sudden have a way more competitive thing. Airbnb is realizing that. So right now I'm in a 30-day Airbnb, and I'm paying Airbnb more money than I ever have. But I think I'm amortizing the cleaning fees, so it's a lot more competitive to hotels. So they're going to move into that. The real estate business.
Wait, hold on. Meaning your cleaning fee you can pay over 12 months?
Well, let's just say when you rent an Airbnb, you basically have to pay for 1 day's worth of stay in terms of fees and cleaning. But that cleaning fee, they only clean it once when I leave. So if I stay for like a week, that 1 day's worth of cleaning it only increases my budget by 16% instead of 100%, kind of.
Right.
So I think what they're realizing is people are going to start ditching their leases, living on Airbnb. The point I'm making here is the real estate business isn't going away. I actually see them getting to 8 billion in cash flow a year just from real estate, or 4.5 billion now. Chesky says he's going to launch 2 businesses a year that can do $1 billion in revenue. He thinks they're going to get, and it's not what anybody's thinking. He's cooking up services. I think he's going to get into cleaning. This is just one moonshot. You rate cleaners. Now I pay my cleaner through Airbnb, and now I'm like, wait, I'll just list my home on Airbnb because I'm already cleaning it through Airbnb. They're already promising to clean it the way I want it cleaned. Why wouldn't I also just make money on it when I'm on vacation? And then they're going to disrupt cleaning. And then what are you seeing here? It's a software company that has no assets, that only gets cash flow on top of this. And I'm like, this is the best. Everyone's looking at it like this business sucks. And I'm like, if I had $80 billion, the first thing I would buy would be Airbnb. Like,
so what is the market? What is the market upset about then? Why don't they see
growth slowed to 11% in the most recent quarter? And I think Airbnb is a very like this thing. And if you listen to the dialogue on the and I want you to give me pushback on this for why I'm wrong, but if you listen to the dialogue on the earnings call, it's just so Wall Street. Like, to get back to our original point, like, they're not leaning into the retail customers. Like, I cannot get in touch with investor relations. I've been an Airbnb customer for 10 years. There's so many customers who are probably shareholders, but they're just ignoring them. And they make it really hard to get on the conference calls. The conference calls are so boring, and they're nothing about the vision. They're marketing to these quarterly Wall Street. It's just exactly what happened to Tesla. It's like, if you're just playing this dinky Wall Street game, ignoring the retail investors who get the vision, then that's the share price you're going to get. If you start leaning into the vision, I don't know. That's one of my schemes. But and then where I think the rubber meets the road is if the growth deceleration continues, because that's what Wall Street sees. The growth goes a little bit like that. Oh my God, we're going down and everything's done. But if that starts to turn, I think we're immediately going to get it. But
it's really interesting. I mean, it reminds me of Palantir, right? Palantir has $4 billion in cash, no debt. Adjusted operating margins went from like 17% to 40%. Free cash flow is going to be $850 million to $1 billion this year. They're going to be printing free cash flow over the next couple of years as those margins increase. Same thing you're describing with Airbnb. And you're describing a software company that, again, it does not have assets versus the Hilton that has these hotels they have to maintain, and is operating off of this user experience that seems to be best in class. Now, here's the question to you. You talked about cleaning fees. You're seeing a lot of like uprising against people just feeling like either the Airbnb is too dirty or the cleaning fees are too high or Airbnb is not being transparent with the fees. Are those idiosyncratic concerns? Like when people say Robinhood, GameStop, like that to me is like a stupid concern from years ago. Is that a stupid concern to you, or is that a concern that's an actual thing to care about from a bear perspective?
It's not a concern because if you look at the data, like more people are booking Airbnbs than ever, spending more money on Airbnb. So it's just it's kind of like all anecdotal like things. Like if an
Right.
Airbnb is out of your budget, then you complain to your friends like, the price. Like it's just they're so that's another big thing is like I listen to these things. I call them wham-whams. It's just a bunch of whiners being like, well, the cleaning fees were too high, so I didn't book it. But oh yeah, I did book it 3 months later with my friend's group vacation. We had the best vacation ever, and it was sick. And I'm like, okay. Like it's just like nobody stops for a minute to be like, Airbnb's not forcing you with a gun to your head to pay the cleaning fees. Buy a hotel if you want it. They're just offering you a service with the price. If you don't like the price, don't buy the service. But the fact is, more and more people like that service and are paying that price and are buying it every single year. That's why they're growing. So I'm trying to like meet this middle of like, I hear you on all, and the biggest thing they fixed was the inclusive price. So they made it so you can just like see it with all the fees and they don't hide the fees
Right.
anymore. So that was the biggest thing
Right.
people were annoyed about, and they fixed it. So I'm taking the other side of that trade of like, I'll pay the fucking cleaning fees, and I think more people will too. And they're still going to be, we're all going to be doing our, and the next 10 years of my life, 31 to 41, the best times of my life, my favorite money I'm going to spend is on group vacations with my friends, and I'm going to be paying Airbnb. And then I'm going to look back and the stock's going to be $1,000 a share. And I'm going to be like, and I didn't invest. And I knew it. It was like when I was watching Netflix in college, when I was buying everything on Amazon, when I was going to Starbucks every day. And I was just like, yo, I'm not going to invest in them. I'd rather like research this cloud company that's doing AI. It's like, I'm just paying Airbnb more than I'm paying anybody. So I'm buying that stock, and I'm pumped to pay them. So
You know what I like about this also is like Airbnb is a verb. It's a
yeah,
universal verb. And when people think about group vacations with their friends, I've been on a couple over the past couple of years. It's always been Airbnb. It's never like maybe a hotel if like people are feeling a little wonky about the Airbnb, but most of the time, if you want to experience, it's Airbnb. So I guess so then here's the next two-part question here because I agree on all of that. A, the first question is what is AI and is that a tailwind or a threat to Airbnb? And then B, this experiences thing they launched where you can like live in a Disney mansion, is that actually a big business or is that like a little marketing tactic they're doing?
experiences, no, I'm not focused on it. I think Airbnb is all real estate until they launch these new businesses, which Brian Chesky's not telling us anything about, but they're going to launch
Yeah.
2 of them next year. So I think that could be an insane catalyst when they just have some big announcement. In terms of AI, when you search for an Airbnb, like there's not a human like being like, oh, Gally, I'll find the best spot in Boston in 3 weeks. Like that's all already algorithmic. And so I actually think there is a big similarity to Palantir, which is like nodes. So each like location and all that, like, do you have AC? Do you have Wi-Fi? How does that do in the pricing? Where are you located? What neighborhood are you in? Like Airbnb is building the most unique trove of real estate data in the world. So if you think that data is the leading edge to say when I want to I want to go on a vacation next week, to be honest, I don't really care where I go. I want to go somewhere new, somewhere warm, somewhere easy to get to. Airbnb has the most data to like serve me those opportunities the fastest. And so I kind of see them setting up to be like the AI travel concierge. And I believe Brian Chesky talks about that. So um I don't know. Like if I think about any AI travel concierge in the future, the biggest thing they're going to have to do for me is scan Airbnbs and book Airbnbs.
Right.
I
Right.
don't know. So that's kind of,
Yeah.
I'm curious what you think though. Are you seeing that with the Airbnb? Like,
Yeah, the only threat from AI to Airbnb is that Airbnb is just a UI on top of like the actual data, and that AI can replicate the user experience just by voice commanding what you want the AI to do. But if you're voice commanding it to book a United flight, then United stock does well. If you're saying, "Hey, book me an Airbnb. Here's all my metrics. Go get it done, Siri." Like that helps Airbnb. So even if Airbnb loses some of the control over the user experience of actually like clicking the things because AI is doing it through voice commands, I still think the business is going to Airbnb, which is what matters.
can I pitch you? This is my last thought on Airbnb, and then we can start talking something else. But you just reminded me of. So why is Airbnb going to win at long-term rentals when nobody's disrupted the lease? Because my cousin is like
Right.
I've seen 5 companies do what you're doing in New York, 30-day stays. Every single one has gone bankrupt. Well, guess what? Airbnb is not just a UI, they're a trust network. I have 27 perfect reviews on Airbnb for 10 years. When I rent a thing, that's a better vetting than any other candidate. Bro, I'm about to clean this Airbnb myself and I'm paying the cleaning fees because I want a great review, because I want to keep traveling the world on Airbnb. I want the dopest host to want to host me. I want to be an uplifting, awesome part of this community. And I'm building trust on this network. And so it's actually a decentralized network of trust. And that is extremely powerful. And that is an insane moat that is a verb that no one can replicate. It will take a very hard time to replicate. So that's like my one thing of why I think Airbnb is going to succeed where a lot of others haven't.
I like that a lot. I mean, like Google reviews does not compare to the types of data that Airbnb has over 10 years of, 4 stars, 5 stars, if is golly good to host or not good to host. Yeah, dude, I think there's an argument. I think there's a hell of an argument. Again, I've been thinking about Airbnb for the past couple months. Again, Arnie, one of my good friends, he's been on the Airbnb train, and his big thesis as well is very similar to yours. He's like, this is a verb. Everyone uses it. And some people might want to stay at hotels for idiosyncratic purposes of cleaning fees being too high, but that is not stopping what Airbnb is doing. I mean, even in the Olympics, right? There was like 100 million or something bookings in over a month in Airbnb. It's just, it's one of those things where it seems like a valuation smaluation on this one. It's like, this is a company that will be around for 10 years. And that might be the thesis there.
So are you buying? What do you think? More bullish than you were, like scheming on it still?
So I think 2025 is when I want to open up my portfolio. Right now it's Palantir and Robinhood. My 2024 has been a big bet on these two companies.
I like it.
Very concentrated. And as retail investors, it's funny when people try to diversify. I'm like, dude, if you got a couple $1,000,000, okay. But if you're trying to get to a couple million, you really got to find ways to go all in and then, protect the money. So this year's been a bet on those two companies. Next year, the main position I want to build out is Tesla, because don't have a really big position on that yet.
Ooh.
And then look, yeah, we can talk about that.
I want to get into Tesla too. Yeah.
Yeah. And then I'm looking for other names. And, I like wheeling options a lot. So selling puts and calls. And so I got to take a look at the Airbnb premiums, because if the Airbnb premiums are good, can I sleep well at night knowing that I might get assigned 200 shares of Airbnb? And yes, personally, because I believe in the company. Now, the stock, I got to do some more digging. Is it okay to buy it at 120, 110, 105, 130? But it's definitely a name that'll be exciting in 2025 to look at deeper.
Keep me posted if you have schemes on it.
I will.
But
you'll know on Twitter. I'll post if I'm going long Airbnb, so you'll know.
Okay, so Tesla, that's still my number one position. Sounding like that's your next one that you're looking at. What's your scheme at with Tesla?
Yeah, I was really skeptical on FSD for a long time. My core thesis was like, who would trust their little kid inside of this self-driving vehicle? I was like, this is fucking stupid, bro. I was just like, this is the dumbest thing ever. And then as you really look into the thesis, you understand what it means for opening up productivity. You understand what it means for having a real world use case of AI that people can actually get the benefit from it. Meaning, if I can be more productive in my car, I can contribute more to my work, which means overall top line GDP should increase. And then the benefits of that is because I'm paying $8,000 to FSD or $99 a month or whatever it is. So the value creation there should be going to that real world application of AI, which is FSD. That's one part of the thesis that I've become more friendly with. Actually, over the weekend, I went and tested a Model Y for the first time ever. I know it's crazy that I'm 27 and it's the first time I've been in a Model Y, but I did. And it looks like I'm buying a Model Y at 0% APR. So that experience itself was like, oh my God. Now I understand why you've been so cocky for the past 10 years on this stock. It's like you experienced the car, and the car is just something special. And then robotics. So I have a private investment in a company called Figure.ai. And I know a lot of people have a lot of polarizing thoughts about Figure, but ultimately I think that humanoid robotics is going to be the biggest TAM of our lifetime. I think Figure can become a $1 trillion company. And I think if they're number 2 behind Tesla, and Elon thinks Tesla can become a $25 trillion company just off robotics alone, I think although the entry price at 270 might not be phenomenal just based on the twist and turns of the market, if you're long humanoid robotics, you can't not be long Tesla. And so that kind of sums up the thesis for me. And although I'm late to the party, I think it's still early over the next 20 years.
So you're big on the humanoid component.
Yeah. I mean, that's kind of my big thesis on Tesla, because at the end of the day, there is a labor shortage in the marketplace right now. Labor contributes to $80 trillion of GDP. All of that labor over the next 100 years is not going to want to be stuck in a factory, building a car, or like doing this manual work. Like this is stuff that was born out of the Industrial Revolution, and now that we're in the AI revolution, all of this stuff should be automated, which means you're going to see Amazon buy millions of robots, and they're going to have to buy them from either Tesla, Figure, or a couple other of these startups. And I think Tesla would have the most trust just in terms of their vertical integration and manufacturing speed. And so to me, when Elon says that's a $25 trillion market, I actually believe him. It's funny because Ark and Cathie Wood, they only focus on autonomy, which is cool. And they think that's like an $8 trillion market. I'm like only focused on robotics, and FSD is really cool on top of that. But robotics is where they're going to be producing hundreds of billions of net income, not cash flow, like profits. The multiple on that is multi-trillions, right? So that's why it got me excited.
Have you seen those memes of like the Optimus under the Christmas tree?
Yes.
Those are like,
yes.
I'm like, that's getting me excited because it looks like it's like the iPhone. Like I really like felt that. I was like, oh man, this is going to be like the new iPhone, except we're spending 10 times as much money on it. And think about how big of a company that made Apple. And so
Right.
it really is like, also, this is kind of random, but do you have any thoughts on the political, what's happening with politics right now? Because I feel like that's another big thing I'm thinking with Tesla. Like, how is the political, like US elections factoring into your portfolio / Tesla?
Yeah, so someone actually asked me this question on the market open today, and they said, "Hey, Amit, big Tesla shareholder. I think they can 2 to 3x over the next 5-6 years, but I'm afraid that Elon's like super in bed with Trump, and like, what does that mean for the portfolio?" I take a very practical approach on this. Tesla was 130 in April, and Elon was like, "Trump, Trump, 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 make America great again." Tesla's 270, and Elon's still like, "Trump, Trump, 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 make America." The market doesn't give a fuck, in my opinion. Like they cared about the fact that EPS growth was slowing down. That's not happening anymore. Energy is ramping up. Tesla wants to deliver 20 to 30% vehicles next year, is what Elon said in the call. Same thing with Palantir. Karp is very political. Karp is a staunch proponent of Israel, and a lot of people don't really like what Israel's doing. He was a staunch proponent when the stock was 15. Now the stock's 45. I think the market doesn't give a fuck, dude. I think if you put up the numbers, the market needs money and or assets to compound their capital in. So I think if Trump wins, that's bullish for Tesla. I think if Trump loses, that's not bearish for Tesla, but Harris is not going to be as friendly with Elon. But I still think long term, if Tesla executes, politics is not going to matter.
And it feels like we're entering an era where like people are allowed to be more ideological. Like and companies have these takes, and it's not like, because it used to be for the past 10 years, like every company is just kind of a blob, like we support everything. But now it's kind of like that just fell apart. So I don't know. It's kind of like a new territory, but I'm kind of with you. It's like I feel like the stock market is a lot more level-headed than like humans who kind of just have like especially around elections, like just get crazier, but the market kind of keeps a cool head. And it's like, is this really going to change it? Does this really matter?
Yeah, I agree, and it's like the polarization around ideological dogmatic beliefs that people have is massive. I mean, you mention one candidate's name, and other people just get upset for even mentioning that. So that's like not stopping. But in relation to that, the market I don't think is political. The market wants to know if companies are going to go up or down based on earnings per share, and that's it. And so I think they factor in the Trump tailwind. That's like technically bullish for Elon, even though he might take away the tax credit, which is like not bullish. So like there's all these moving parts. But if Tesla executes, the market's buying Tesla.
For sure. So, I mean, I know you're busy. I don't want to keep you too long. What other hot schemes do you have for us? Like, what is like burning the top of your head of like that you're scheming on right now, or that's interesting you?
So we didn't talk about Robinhood yet, so I guess we can have a little conversation about that.
Yeah.
I just think Vlad is fucking. He understands innovation. He understands speed. I got the honor of interviewing him in March. I'll actually give you a little background story on this because this is really funny. His team messages me in February, and so Robinhood was $7. I'm talking about Robinhood on Twitter because I'm like, dude, I use this product every day. It's kind of you like Airbnb. I'm like, the market cap was less than the cash they had on hand. And I was like, okay, so this is stupid. And I'm using this product every day. $7-8 kind of doesn't make sense. I call up my investment banker friend in LA, and I was like, dude, it was December 3rd. I was like, I'm thinking of putting $50,000 into Robinhood call options tomorrow morning at 9:30 a.m. What do you think? And he was like, let's do a model, like a valuation model. So we do all this valuation shit. We're up from like 2 a.m. to 5 a.m. And he's like, yeah, fair value is like $16. The stock's at 8. I'm like, all right, I guess we're buying 50 grand of Robinhood call options. And that morning I woke up, like I already had so much conviction, but then I got to talk to him, and he's a big numbers guy. And he like really said, yeah, it feels undervalued. And so I bought them. And from that day, every other week, a new piece of news started coming out about Robinhood. They're doing this, they're doing that, the gold credit card, blah, blah, like all this shit starts happening. So their team messaged me in February because I keep talking about them more and more after that initial purchase in December. And they're like, hey, do you want to interview Vlad? And I look at the email, and then my ambitious, crazy ass responds with a 1-page list of demands. I was like, I'm only doing this if we have 60 minutes. I have a studio. I want it to be in New York. I want multiple lights and videos and microphones. Like I came up to them like I'm Lex Friedman when I'm not Lex Friedman. And I said, here's the terms of this interview. And they didn't respond for 2 weeks. And I'm like, they're definitely gonna tell me to fuck off. They're like, dude, we gave you an opportunity and you're over here trying to exploit this opportunity, make it like the biggest interview of your life. And then 2 weeks later, I'm like waiting for this email, and I get the fucking email. His communication strategist is like, all right, that sounds good. Are you free on March 27th? And I literally jump out of my chair because I usually don't jump out of I jump out of my fucking chair because I'm like, wow, sometimes you actually have to shoot your shot. And I gave a list of demands to them, and they were like, sure, that's fine, we'll do it. And so it meant a lot. I think Vlad knew that he was doing a big thing for my career. Just like when Elon let you ask a question on that earnings call. I mean, that really introduced you to a lot of people. I think Vlad was doing me a solid there. And I think it's because when his stock was 7, no one was talking about it besides a couple people on Twitter. He ended up seeing my content, and he was willing to repay the favor there. So yeah, it's amazing. I think Vlad's executing. I think Robinhood is going to be Charles Schwab for my generation. $80 trillion of wealth from the boomers is going to go down to the millennials and Gen Z. All of that is going into Robinhood and Coinbase. It's not going into Schwab, Fidelity, etc. And if that's the case, when you match that with speed of execution, which is what Robinhood's doing, it seems like this could be a really good story over the next 10 years as well.
And it's so interesting that the companies are leaning in. Like, it seems like that's paying off huge. And so that's what's kind of getting me excited, because it's like when Elon does it, it's one thing. But now it's like you got to think other CEOs are watching Robinhood Stock, watching Palantir. I really feel like it's been a long time coming for the retail investor to have their moment, but it just seems like it's really like it's cool to see these CEOs lean in. And I think X is kind of a big part of it, like the interactions on X. So what's your take on Robinhood then? But give us a little more flavor of like your bull case. Charles Schwab is interesting. What's your take on I'm a little bit biased because I'm an advisor to Public, and which is like kind of like
Public is awesome.
to Robinhood.
They're awesome.
And they're focused more on like investing in yield, I would say, and Robinhood's been more like trading and like sexier stuff. Like I just saw they did the gambling markets. Their credit card was insane. Like, I don't know. I kind of think Robinhood is like, I felt like their innovation slowed down a bit, but right when you're saying like a year ago, it feels like they kicked into just insane high gear and have been red hot making the right moves.
Yeah, it's interesting. Public is really cool. The only problem I have with Public is that to me, they're another brokerage with a slick UI, but like Robinhood did that years ago. So then the question is like, what else do they add? And I know they're the yield and the corporate bonds and all that stuff, and that's cool. But then my question is, do people...
So I got to tell you a story, because the reason why I got involved with Public is because I made a video about Robinhood. But it wasn't that I was buying the stock, and this is way before they IPO'd. It was that their biggest, or maybe they were about to IPO, but Citadel was their biggest investor and customer. So they were saying they were trading for free, and they were selling their order flow to Citadel, pretending like it wasn't anything. And I'm like, I know how finance works. Citadel is only paying you hundreds of millions for your order flow because they're screwing your investors. And so something about the idea of saying you're called Robinhood but secretly like selling my order flow to Citadel, I have kind of flipped on that, because they did actually, that provided a lot of liquidity and it did make it easy to trade, and who cares about the fees really. But part of that, like, I always thought that was like I don't know, but I got to be honest, like I changed my mind, and I've kind of been coming around to Robinhood, and I'm like, honestly, I think they're good for the system. I do think there's a little bit too much focus on trading and margin. Like I don't think people should have margin, and they push margin. And I don't, so there's a little bit of things of like, I think the way this is going to evolve is there's going to be room to play. Like different players are going to emerge at what they're better at. But part of me is also like, what are the switching costs of these businesses? Like Robinhood and Public do these promotions where people can switch accounts. Like that could flip really quickly. And so I don't know. I'm part of me is like, like when I think about like Palantir and just like the moatness of that business seems like such a stronger moat than
Yes.
like a trading and like you see what Kalshi did. Like Kalshi blew up like crazy, and then Robinhood is going to cut them out tomorrow. So it's like it's crazy how hot this thing can turn.
Yeah, it's interesting because the debate I was having with people in 2023, late 2023, was that Robinhood has no moat, right? And they were just like, it's just a brokerage app. It's it's like a pseudo bank. People can, change all that stuff. And in my opinion, this is where user experience mattered so much. I was using it every day, and I was like, I will never leave this platform. So if I'm feeling like that, the question becomes, are other people feeling like that? And then the DD I did just showed me people don't want to leave. They want everything integrated in this one thing because whatever they did, the user experience, user interface, they made it usable and real for people of my generation. And then when they started doing this 1% brokerage match, and I saw people from Schwab. I mean, I had a guy yesterday who messaged me. He transferred $4 million from Schwab to Robinhood. If you have $4 million in Schwab, obviously you've done well for yourself. You're up there in the top 0.01% of America, and you're bringing it to little old Robinhood. Why? Because they're giving him a 2% match. So that's hundreds of thousands of dollars. He's not going to leave that offer. And Schwab is not that exciting enough to stay with them if they're not going to give you that match. So the switching costs are low. And that is a bad thing for Robinhood to an extent because people could leave. But if they're on the other side, i.e. the side of tech innovation and fixed costs, which allows them the unit economics to give you these crazy matches, then they're just going to be bringing over a lot of assets onto the platform versus people leaving. In terms of that whole Citadel stuff, I feel like that was one of the idiosyncratic concerns that you think people have about cleaning fees. Like whenever I thought about Citadel is paying Robinhood because they're screwing, I'm like, I don't think they're screwing investors. I think if you buy a stupid stock, it's not going to go up. Like if you bought Palantir at $8, even if Robinhood sold that order flow to Citadel, Palantir's at 45. You what happened in that? You didn't get it at $8.05. You got it at $8.07. You paid 2 extra cents, but you had the peace of mind of not having to pay a trading fee. So it's like, to me, I always felt, yes, there is an argument that the name is contradictory to the practice, but is the practice either hurting investors to an extent where it makes sense to leave, or is just opening up liquidity? And this is kind of what you have to do from a gamification perspective to get people to invest, which is the most important thing. Young people don't invest. And if Robinhood gets young people to invest, you just have more money entering into the system. So yeah, that's why I think it's gonna be really exciting and their innovation is good.
I like it. I like the debate. It's actually I'm going to meet with the public team today in New York, which is funny. But
you're in New York right now? Are you in New York?
Yeah, I'm in New York.
Okay.
Dude, I think this is so interesting. Okay, what other anything else?
Oh, let me go.
I'm also like, bro, you shouldn't be diversifying. I don't know why. I love how you have different style than me, but I love your picks, Robinhood and Palantir. Like, I think you're crushing it with those, and you've nailed the thesis in on the long-term thesis. And a part of me is like, bro, like, what are you gonna find better? It's like Warren Buffett. Like, why not just buy your top 2 picks instead of buying your third best idea? Like, that's why I'm like,
I agree. I agree. It's 100,000%. I mean, the betting on those 2 names have done very well for me this year. And honestly, if these companies have so much room to grow from a content perspective, there's so much to cover as they keep evolving. I'll give you one wild pick to end this out.
Yeah. And, give me some moonshots, wild picks.
Okay, you can sit on this one. This is a controversial one. My audience clowns me on this, but the stock's up 60% this year.
Let's go. Okay.
I don't have a position. I had a position at 12. I sold it at like 12.50 because I was like day trading it. But I really think I need to develop a big position in this, at least of like 2,000 shares would be nice. Grindr. I think they have a monopoly on gay dating. And I think when you look at their cash flows, when you look at their balance sheet, it's not amazing. The debt is not amazing. The valuation is annoying, which is why I haven't bought yet because I want it to come back to $9. But gay people need a place to hook up. Tinder sucks. Hinge sucks. Grindr has 13 million users. And I think this is a stock that's closer to 25 in a couple of years. I really do.
Bro, did not see this coming, but honestly, you might be onto something here.
There's even more to the thesis, and we can go into it later one day. But like,
there's
a lot of moving parts to the Grindr thesis, and gay dating starting to get legalized all across the world. And look, Grindr is a legit monopoly. Like when you talk about like monopolies, gay people, I've talked to a lot of them. They don't go to Tinder or Hinge. They go to Grindr. And when you have something and the app sucks.
Even if you're not gay, everyone knows Grindr. Like it's like like everyone knows it, even if you're not gay. So it's such a big. It's like a verb. It's like Airbnb.
Yes, and like Airbnb. I downloaded the app. No, I'm not gay, and all the comments are going to come for that. But I looked on the app. The app is horrible. User experience is it's the opposite of Robinhood. And so that's something they can improve. Like just the ads are annoying. Everything just sucks. It's buggy, all this stuff. But 14 million people still use one of the crappiest hookup apps because there's like no other place to go. And so now they have more advertising. They have this monthly subscription. Also, here's a fun fact for you. Gay men are one of the highest gross income population in America, which means they can afford a higher subscription per month. I mean, there's all these little twerks. That's why it's fun to go into a thesis, right? That's why it keeps you up till 5 a.m. because you're finding out all these stats. And so I think Grindr is something people should look at over the next couple
Wow. Well, I'm sure you're going to have a lot of fun doing a bunch of research on Grindr.
I will.
No, I like that one. Actually, one of my buddies like told me about it, Grindr Stock, and he was bullish on it too. So that's a good damn. See, you know what I'm getting excited about is more and more IPOs. This is getting me thinking. Like, I feel like Instacart's been doing well, like Klaviyo, Reddit. Like, I've been seeing some of the previous IPOs start to rip. So then the bankers are like, ooh, let's pump more out. So I'm getting excited because I'm kind of feeling like we've been in doldrums for years, but we're about to like have a new kind of like rip era with IPOs. That's going to be super excited. You got any theories on that?
Yeah, well, one thing is a little bit bearish that when all these IPOs come to the market, there might be too much liquidity, like 2021, and like based on valuations, how crazy! Like when Databricks goes public, are they going public at 80 billion? Like what are the valuations going to look like? So I think that's one thing to be concerned about. But a lot of these AI names are going to go public, and they're going to get a ton of investor demand. One stock that I missed out on was Reddit. I totally misread the IPO. Valuation was stupid when it IPO'd. Like it was really undervalued, and now the stock's up 60%. Reddit does have a moat in terms of the AI data that they provide to Google and Microsoft. Maybe not the biggest moat, but that's one of the names that I kind of missed out on. But I agree. I think there's gonna be a lot of names that go public, and the best of the best are probably gonna get liquidity, and the other ones are just gonna probably fizzle out.
Awesome. Well, anything else you want to end with? Or I really enjoyed the scheme. I gotta say, I'm fired up. I love your energy on the market open. So just gonna be watching. Very excited to see how all these stock picks play out. And we'll keep scheming.
Yeah. No, first, I just want to thank you publicly, dude. You set the foundation for doing what I'm doing with the retail investor movement, specifically with Tesla. And like Tesla became what it is today because people like you actually understood this shit before everyone else. And you publicly talked about understanding it. And it created the ability for me to, publicly talk about a company like Palantir when it's down in the gutter and then, see it come to life. So I just appreciate everything you've done. It's cool to really talk to you. And I'm sure we'll be talking more in the future.
Dude, I appreciate that. But honestly, dude, I think you're on, like, we're early in this. Like, this is, like, what you're doing with Robinhood and Palantir, dude. Like, this is big. It's the start of a tidal wave that's coming. And that's been a long time brewing. So, very excited. Amit, everyone, I'm going to put a link to his channel. Go subscribe. Follow him on X. And we'll see y'all soon. Thanks for tuning in. Peace.
Thank you, everybody.